Hey, just testing the sound. Let me know everything's good. Hey, just testing the sound. Let me know everything's good. Be about 3 minutes. We'll get started. Thanks a lot. Welcome, folks. We are live, and sorry for a little late start. A lot of complications today. It's getting harder to do these Wednesday shows, but I will continue to do them. It might be better that we start, start at 2 o'clock, but we'll go. Just make sure you subscribe to the channel, because this is important for us. A couple things I want to talk about today. It's interesting. I started looking. I actually subscribed to TradingView a while back, and I finally engaged this. And I've been looking for a good venue to put out some of my indicators. I have 14 proprietary indicators that I built, and I'm working on getting most of them on the TradingView platform, and I'll talk a little bit more about that. And the reason why I think it's important is we've gotten a lot of traction on our software. We got a lot of traction on the channel, a lot of things going, and I use these PPMs all the time, and I thought, man, it would be nice to get those out to you, and ultimately the grid and other things. So yeah, I think and we'll get into the content here in a minute, but I just want to let you know we've already got several hundred people that have started following me on TradingView. I'll start putting content out over the next couple of days. I'm getting my legs under me on this technology, and I must tell you, for an old guy, I've used TradeStation since 1992. In fact, I was the first person to ever sell a third-party application into TradeStation in 1992, and I've been with them for a long time. But the TradingView platform, what I'm seeing from it already is just amazing. So it's going to give me ability to start to put wave counts out and other things. They've made it really simple. There's one element they're missing on Elliott Wave, and I'm going to reach out to support and give them some ideas on how to do that. And I've been told they're pretty quick at getting on to ideas. So anyway, I hope you guys, I'm going to be starting to put out, I don't know if it'll be daily content. It may be, I'm going to just see how it interacts with my day. But I think there's a lot of things that we're going to be able to do together on that platform. I was looking at TradeStation. It's too clunky, and download and desktop application, and trying to get the ability to distribute my ideas and stuff out there. There's just no way to do it. So but yeah, so we're seeing a little selling ahead of the Fed. So let's go ahead and start taking a look at some markets, get this thing set up for today, and see what we got going here. So as far as the markets go right now, we're seeing some selling. S&P's down $1. I mean, it's at 41.78. We did print up to, I think, 97 on the cash earlier this morning. So there was a little enthusiasm. I do expect to see, somebody was asking a minute ago, do I think it's going to be a long or short? I think it will be, I think we'll see a bid come into the markets here. I don't see a lot of downside. I mentioned in last night's video number of 4164-ish. That could be something that happens here, but I think that will be a buying opportunity if we get there. So a couple things that, the favorite word of the new administration is trillion. They love that word. So now we got a 1.8 trillion family something bill that's coming out, a 2.2 trillion infrastructure deal. All of this stuff, by the way, is just talk. There's no reality in any of this at all. So just know that This is just rhetoric. They're floating balloons out there trying to see how markets react, what they think is going to work. It's ridiculous. There's no action behind any of their words so far. We'll see what they can get past Congress, but they're already seeing lots of pushback on every angle that you can imagine. So that's $4 trillion in 2 months. So we'll have to see how this all plays out in the end, because I don't think you could divide by 2, maybe divide by 3 in some of these programs. Well, I'm not sure what they're going to be able to pull off. But right now it's all rhetoric, it's all BS. There's no reality in anything, and yeah, so that's why markets continue. They are inching higher, and I'll get into some of the technical aspects of the markets at the moment. So anyway, yeah, actually, Christoph, every penny of that money, and it's not coming from there. It's actually being created if they do anything. It will all be the Federal Reserve creating money. It's not going to be through taxes. If they taxed the entire economy and took every penny, they couldn't get enough money to do any of these things. So the reality is MMT and universal income, and you'll see some of the proposals that were put out this morning in this. I should know the name. I just had a really hectic morning getting here, so we'll just call it the family bill. It's not a family bill. It's just another excuse. It sounds good, and the government's good about coming up with programs that sound good, but the better they sound, probably the worse they are. And it will be taxed through inflation. And one of the things that I'm excited about using the new platform and integrating my work with TradeStation and some of the stuff that I'm seeing on TradingView is some of the access to markets, and especially the world markets. So once I know I've got a lot of international watchers, especially on this show, like Christoph, I know is in Canada. I'm actually going to be able to go and review Canadian stocks, any country, because of TradingView. I'm not at that level yet, but I will be there very quickly. So once I get completely familiar with that platform, next week's live stream should be a lot of fun, and we'll do some things that's happening here. But yeah, so let's go in and take a look at some of the longer term charts and start to get a feel for what's going on. And we'll get to the typical markets that we cover every week. So we're seeing the S&P down 8 cents. So they're just waiting for Powell. We're what, 10 minutes away from at least a Fed statement, and then about 40 minutes away from actually getting any information at all. Yeah, I would agree, Christoph. I almost feel I was actually talking to somebody the other day. I feel like I've been sticking with TradeStation so long, and I actually signed up for TradingView in October of 2017. So I looked at it, I just didn't pay much attention. And now that I'm looking at it, now that I've seen how powerful the Pine script is, and we were able to get the PPMs in super easy. But there's some other techniques that I have. We're going to see if we can get it to work. The guy who I've worked with for over 30 years, a guy named Sam Tennis, he's been the keeper of my logic and all my trading systems, everything. So we're going to see what we can get out there and get available to you folks. So I'm super excited about the platform, plus the social element of it, being able to get followers. And actually, I want to enhance what I'm doing on YouTube in a more dynamic way, especially when I'm around and trading and doing things. I'll be able to actually help you folks out in a much better way and give a much more in-depth analysis. So looking forward to it. But yeah, I would not want to build a competing company against TradingView. They're probably the premier folks there. Yeah, so, but I can't wait till I will be able to actually cover symbols and things on international level. So hopefully I'll be there by next week. I'll let you know how it goes. So back onto analysis, as we look at one of the things I mentioned in last night's video, I think is important to talk about just for a few minutes, is there's a contraction. I'm going to zoom in on this chart here. And when I talk about the S&P market grid contracting, this is, let me show you exactly what I'm talking about here, and I just want to draw a couple things. And this is always interesting when I see this stuff. Is what I'm talking about is you'll see this narrowing right here. These lines at the top are narrowing, and what that's telling us is that there's basically the daily ranges are getting tighter and tighter and tighter. And when they do that, they typically will go down. I'll show you one here. This was what I call a squeeze, volatility squeeze, and then we get some downside. Doesn't mean there's like a big downside. It doesn't necessarily signal a major move of any sort, but we'll get these little squeezes, and sometimes we'll get, like over here, we got an RTX sell signal. So those of you that have watched the channel for a while, you know these market grids, we're actually working on a project right now to get the exact number, but it's roughly about 12% of the time that we get these breaks over here. I'm showing you this right here. In the last 2 months, we've had 3 of them, but if you go back for the previous several months, there was only one right here. So, but when we get these, what happens when the 2 things happen in this contraction is typically I mentioned we could get down to the 10-period moving average. The big move, a big downward move right now would be down to the 21-day, which is right here at 41.19. That would be a big move. That could happen from this configuration. I don't expect it to happen based on we're seeing the PPMs on a short-term basis down here are actually, let me get to a different screen because you're not seeing what I'm drawing. Yeah, sorry about that. Let me redraw this stuff that I'm talking about here. But this is the key to the markets from the standpoint of this, and that's the other nice thing. When I get fluent in TradingView, I'm able to do things on screen and zoom in and do some things that are very simple to do on that platform. So once again, looking forward to that. So this is what I was talking about. This 21-period moving average, this slope here. These are very the 10-period moving average is almost flat. And typically when we get this squeeze here, I'll show you what I was talking about. I don't think it was showing up, but we get this, what I call the volatility squeeze. They typically will come down, and they'll usually go to a moving average that has a trend number on the PPM. Over here on the left is the, actually I'm not sure if you're saying that, but that is 24.249, which is at trend level. So typically we'll go back there. That would be a move back to 41.19. I don't think, like I said, I don't think that's going to happen right now. But we've seen these what I call the volatility squeezes in the past, where we get these moves here, and then you'll see a slight downside into the moving averages. And it's the same thing that we're getting here. We're getting a bit of a squeeze, and here was another squeeze play here, and usually you'll get into a minor downtrend. So we're definitely starting to struggle here. The important thing, or as far as I'm concerned, one of the things that are very encouraging is what's going on in our short-term database. And I'll cover that here in a few minutes. And So as you know, that is the short-term level. So if we go over and start to look at the weekly, we have the same volatility squeeze going on in a weekly, and that would suggest a little bigger number down would suggest that we could go to around maybe 40.20. That would be a pretty big move. That's a 150-point move. I don't see us getting to this average right now. We have all three ppms, 0.70, 0.60, 0.66. So these are all very robust trends, and typically we're just going to follow along this slope here. So let's there's something I'm going to go to the TradingView site, and I haven't. I'm going to do something with you folks today. I'm really super excited. I watched a really good tutorial yesterday, like an hour and a half on every function in this thing. So I put in some decent time yesterday in learning it. But I'm going to show you something here in a minute that I am so super thrilled that I can do, and I'm not sure how far their database goes back, but we'll find out here in a minute. But as we go look at the weekly, we see this. Typically what happens, and there's a chart that I haven't seen or used going back to, I'm going to say back in the 90s somewhere, maybe even in the 80s that I used to look at that I just found out this morning I can do on TradingView. So I'll show you in a minute. But here, as we look at the monthly here, now this is the final couple days, and we've been doing this the last 2 months. If we look at the market grid here, I'll put it up on the screen for you. The market grid for the month of April, RXT 4207. We've been to 4197. This is the cash SPX. So we printed up the 4797 was this morning actually. And so we printed that right up there. We've got just a couple days left in the month. Friday will be the final trading day of the month. And actually, so this is really significant. Last month, the RTX number is 39.97. We got to 39.94. I'll get this right yet. Last month, the high was, 39.97. We got to 39. Now this month, the projected high, 42.07. We've made it to 41.97. So we're really just keep pushing this thing, and the acceleration we're seeing on a monthly is absolutely insane. Yeah. So Stephen, we are working on the market grid in TradingView. Yes, we are. We're looking at Fibonacci cycles, all kinds of stuff. So we'll let you know. And if you're following me there on TradingView, then you'll find out about all this stuff. And I'm not sure. You'll find out how we're getting this stuff out here very soon. So anyway, this pattern that we keep seeing unfold, I believe this is a breakout pattern that we're seeing. A lot of folks talking about a top here in the market, not going to happen. We're seeing a little selling. I guess our friend, the release is out there right now. So if you folks see anything, I'm going to focus on the technicals. Let me know what Jay Powell is saying, and we'll see what's going on. I'm getting a badge here on. Yeah, just looking at the Fed statement here real quick. Yeah, it looks like they're keeping asset purchases like they are. Yeah, GDP is coming out, looking for a 6.5. Yeah, pretty much the same. I doubt if Powell says anything surprising at all. Now we're seeing the futures actually print up, so I'm going to go over there real quick, and you'll see a nice little spike, and we'll watch this for just a second here. Yeah, I think, and I'll go through gold here in a minute, Ty. There's still a lot of structural issues going on with gold. It's still setting up the final part, but we're getting a nice little run here, up 5 here, 84. The high was so far as 88.25. So, and typically you'll get that negative reaction and it follows up. So the next couple hours we'll see how this plays out. But like I said, I don't expect to see Paul do anything but what we expect. Here we are, 93.90, the high on the day, 97.04 on the cash. So we're definitely starting to print back up. As I mentioned early on, I thought that we would see a pump job, and hopefully we don't get this is a monthly graph, we don't get a close above 42.07 on Friday, because that would be not a good thing. Okay, I'm going to show you this chart that I'm super excited about. And this is the PPMs. What we're looking at right now is the monthly graph that we were just looking at, right? But I'm going to show you something that I'm super excited about, and I just found out you could do this. You can put a 3M in here. So I have been wanting to see a quarterly chart for a very long time. So let's see how far back their data goes. Wow, very cool. 1931. This is insane. Okay, I love this thing already. And I also love the replay where you can take a bar chart and play it and watch it unfold. I'm going to do some interesting things with that. But this is a quarterly graph, and this gives you a much different situation to look at. And this is the crash, 1930 crash. This is awesome. I love this thing. This is 74, and right over here, this little tiny blip of a bar is 1/4. This is right here. I'll bring it in the screen here. That's the crash of 87, that little red bar. And what's interesting about this, and I'm not quite ready to do this stuff just yet, but they do have some really cool patterns where I can put some Elliott wave analysis here. And this is, I'm gonna show you. I'm going to show you my analysis that I did a long time ago, and we'll be able to talk about this a bit. And this is, I'll just put this up here for now. This is, you can see this wave count here in the middle of the page. Let me see if I can. Yeah, I wish I knew how to zoom on this thing. Once I get, but anyway, I want to show you this because this is the big wave count. People thought I was crazy back in 29 when I said this was the bottom of a 4 and that there was a giant move coming. Well, we're in potentially a grand super cycle 5th wave. But what's interesting about this, and I won't break this down today, but I will do this, is that I believe that we're in a wave 3 of this 5, and the wave 3 has got a ways to go yet. And I'll break that down in once I get a handle on this tool. I mean, I'm just like overwhelmed. But this is the quarterly graph, which takes out the noise, a lot of noise on here. And I just want to come back on screen. And one of the things that when you're doing analysis that is important is by changing time increments. If you spend all your time on 5, 15 intraday charts and then daily charts, all you're looking at is noise, and you're going to get yourself into a lot of trouble from the standpoint of understanding what the possibilities are on larger trends. So what we're looking at, what we were just looking at on this other chart was a quarterly graph, and I'm like, yeah, that I hadn't looked at this until I viewed this for the first time with you folks, and I can't wait to do some really serious analysis on this. Maybe do a video just on a long-term outlooks and these wave counts. But this is very, very significant from the standpoint of what's possible here. But this brings in that focus even more. But I'll go through the details once I get more of this chart to be able to go. But being able to go back to 1872 is insane. I can't even tell you how impressed I am with this platform and how stupid I feel that I haven't been using this for a while. So anyway, yeah, we'll get to some things here, but as we go down the road, this, like I said, phenomenal. I'm kind of experiencing some overwhelm here just looking at some of this stuff. So let's go back to TradeStation. We are now, SPX has given back the little blip. Let's go over and watch what's happened here. So we get this little what looked like it was going to be a dragon head. Now it's just turned into a sideways consolidation. So the excitement we saw is coming out of here. So now you get the little blip. Now everybody waits for Powell's boring address to the nation and telling you how they'll have the standard government line that him and Yellen and Biden have put together, which will be something like the economy only will do better if you wear your mask. Okay, that's probably what it's going to be. I can't wait. I'll watch the replay of that message later. But yeah, so we've basically spiked up, got a little excitement. Now we're back into the like nothing happened. So we'll see what. I can't imagine that Powell's going to say anything interesting, but we'll be watching. So as I pointed out on the monthly, I'm anxious, like I said, to get the market grid in on TradingView, some other stuff. There's actually some really cool tools I have up that I built in TradeStation, and I have in my suite. Most of this stuff was built around 1992, 94, and it's been part of my arsenal for a long time. So let's go ahead and let's take a look at the NASDAQ here. NASDAQ off a little bit, a quarter of a point, but let's look at the monthly. Let's stick with this right now because I think that we're seeing the same type of pattern. I talked about this happening last month, that we'd see an all-time new high on NASDAQ. Whether we can follow through or not is still in question. But as we look at the PPMs, they're still very strong, and the angle of attack on the monthly chart on the NASDAQ is huge, and this market is going up a lot higher. You're going to have a hard time making a bear out of me in this kind of configuration. We're looking at these PPMs are actually in a very interesting configuration that I've talked a lot about, is that all three of the PPMs, which track the 10, 21, 40 month moving averages, they're all in these very robust trends, and it's going to take a while for these trends to change. And right now we're going up about 450 points per month. So we're just a couple of days. So right now it's 12,332. It'll be 12,750, around 780 at this current rate of change. And so what we're seeing is this trajectory. So literally in 2 months' time, where we're trading right now will be major support. So there's not a lot of downside in these markets. They could turn around early. If they did turn around in May, the old sell in May and go away, I don't think that has worked very good for a long while. So don't get too excited about that. So let's go backwards then. So let's start. We'll go top down. So we'll go from the monthly to the weekly, and the weeklies get a. This is where the trend story that we were able to trade is being told. Is we're seeing that the PPMs are still in trend level, but not at the level that we're seeing on these very robust levels like we're seeing in the monthly. So what we're seeing now is a minimum trend levels on the weekly, but trend levels they are, and the weekly grid so far, if we look at, we've had a high of 14,050. R1 was 14,022, and the low was 865. So we had a R1 S1 on NASDAQ for the week, and that could expand. I think we could see an expansion on the upside, and I still think we could see an R2 by the end of the week, which would be 14,130. Still think there's some upside. We've got a ton of earnings coming out. Let me see if I have my 3x5 cards, so I know what I'm talking about here. Yeah, just let me look at, there's a stat that I had written down. Yeah, so we're going to see, we've got a lot of big reports coming out, Apple, Facebook, all of the FANGs, and the list of earnings that are coming out are absolutely insane. And so we're going to see, I think, the underlying bid remain. I don't have expectations that earnings will derail the market. And I mentioned this a little bit, and I talk about this every earnings season, is that the reports that are the estimates that come out, I always wonder, is it the, who's wrong here? Are the markets, are the stocks doing better than expected, or are the analysts just really bad at estimating, or are the estimates actually coming in lower than expected? And I think it's a combination of both. I think a lot of the analysts underplay these things. You get a bid on these stocks, and it's always been somewhat of a controversy. And I don't put much into the estimates, but they do play into market psychology, so they are weighted at some stage. Yeah, Carl, we could actually have a long discussion about that and probably would agree on most everything. Okay, so we'll back up and let's go to a daily here. And daily is just a flat line. There's still upward momentum on the 21 period moving average, 13,756. If you saw that, you could buy the Qs all day long at that level, and they should bounce back up. But the same scenario that's happening on the SPX and NASDAQ 100 and all of these, even if we brought the composite up, you'll see these same patterns across the board, is that we're seeing what I call that volatility squeeze. And typically the volatility squeeze would suggest that we would come down toward that 13,756 number. All right, so let's move on. Let's go to Russell. And I'll look at the Russell. I mentioned this last night, but let's go to weekly Russell because I don't think there's much to see here on the daily. But we are seeing the squeeze as well on the Russell, but we've managed to just hover along the 10-week moving average for about 6 weeks now. And actually we could go, we've just been above the 10. We've spiked under it, but we've managed to come and close very near it. And part of that reason, there's not a lot of momentum in the 10-period moving average right now, but underlying is the 21 period moving average is 2176, and that is rising about 20 handles. So that'll be 2200 on, and when we come into next Monday. But this pattern is still bullish. We're seeing the PPMs in that what I call the trend maintenance mode. So there's not a lot going on here except for there is an uptrend. It's not as vertical as it was. It's flattened a little bit, but there's still very sustainable trends involved. So buy the dip anywhere near this 21 period moving average is going to be the right thing to do. So let's take a look at the monthly chart as well. And you'll see on a monthly, we're having an inside month this month, which what that means is that it's really just a consolidation. I talked about this, I know, over the last couple of weeks whenever I bring up the monthly Russell. We're going to see a very broad trading range. So my expectations are, just looking at the charts, is that we're probably going to see the spread. I'm going to go to that next. We're going to see that spread deteriorate even further as we go down the road here, meaning that the NASDAQ is going to have the relative strength will be biased to the NASDAQ as we go forward. So let's go ahead and let's just take a look at that spread real quick. So you'll see here it's starting round off. I think this is the daily. Let me just see what I've got up here. Yeah. So this is the weekly trend here, and let me zoom in on this area here. So when you look at what's going on with the spread, we basically have peaked out. My expectation is we'll see a consolidation here, and we're not going to see a lot of further advances. The high in the spread has been made for the short-term period, maybe for as much as a quarter or more before we'll see any leadership move back toward that small cap type trade that I talked about. And you know, I actually told you folks about this trade back in July and August of last year, which when it was bottoming, that this was going to be the play, and it really got frothy. There you couldn't find one story hardly on CNBC, Market Watch. You could go to all those places, and all they were telling you how value and small caps were in play, and you got to own those. Was right at the high when those stories hit the peak right at the high. I'm pretty sure you could probably use Google Trends and just put in small cap stocks, and they were peaking at that same point in time as far as what was being searched. And so what we're seeing on this spread, and this is why I'm telling you that the NASDAQ is going to be on a relative basis the stronger of the two. All right, so let's get into some other stuff here. Yeah, market's just stabilized here. So Paul's going to be talking in 8 minutes. Maybe we'll get some movement. I can't imagine his boring opening statement is going to have any effect, but we'll see if there's anything there. All right. Let's talk about this is probably appropriate to talk about 10-year starting to move up again. This is the monthly, but let's go to a weekly 10-year chart here. And I talk about this stuff a lot on the channel. Is one of the things that I think is something you need to pay attention. This simple 10 period moving average is up at 1.86. That is at 1.62. We're trading at 1.64 right now. My expectation is that we'll see the market grid on Monday turn back up again, and we're going to start to see yields move back towards that 1.7 level. And whether it's inflation news or expectations that starts to show up, there's something that will be going on here that will start to drive this market, the interest rates higher, and that should be. I think that will be a consistent thing. And as I've talked a lot about, is that we're looking at the possibility of getting up to about 1.94, 1.96. Once we get above 1.7, that will be your next level. And the critical level, we'll go to the monthly graph now. The critical level is going to be if the 10-year gets above that 2% level. But so we look at the monthly, you can see the monthly has some resistance here at 1.88. So 1.8, we'll call it 1.88 to 1.94 is going to be major resistance. I think we'll see it back off if we do get up there, and that's going to be maybe next month. Actually, it could be May and as late as June before this will happen. So as far as let's go and take a look at the yield curve, and this is something that I think is I focus on the 530. Some people look at the 210s. The 210s aren't as significant as the 530. The 530 gives you, there's a lot of money that flows around banks between the 5 and the 30, and this has always been my spread to look at, and this is what I was talking about. We go back to, this was the famous March 3rd / March 9th level when the Fed announced that they were going to buy anything, everything to support the market. And I was saying then that the Fed will not allow zero rates in this country, and they want the yield curve to steepen. And you can see here what happened from this point forward. And now what's happening, I think they're happy with the yields, where the 530 spread right now is 1.41. That's a decent number. I've seen this as high as 2.25, 2.5 over the years going through. I've been doing this for 40 years plus, and so I've seen this much, much higher. But this is a reasonable level, and this gives the banks opportunity to make some money on the spreads. I can tell you, I consulted some of the largest banks on the planet in their proprietary room for many years, and this was the main focus, is the 530s. And even though the structure of the markets are more toward the 10-year, this spread still means something when you're sitting at a bank desk and you're looking at a portfolio at a bank, because this really encompasses a better and wider piece of the yield curve. So this is why I always focus on this, and I don't really. I've got the 1030 up here, and I'm just going through some stuff. That's another thing that I'm working on. Just keep bringing up TradingView, which there's a lot of stuff I'm going to be able to put together and build a lot of pre-built charts and things I'm going to be able to bring up for you. So I'm anxious to do that. and I suspect that that will start to get uh, implemented more into the YouTube channel as well as the channel on TradingView that I'm just in the beginnings of setting up. So thanks for being early adopters on those of you that signed up. But this is just telling us that the markets are, from a interest rate structure standpoint, are very healthy. These are very healthy markets. These are good structured markets. Say whatever you want about the Fed. I'm not necessarily a fan of what they do, but they have engineered this thing as perfect as you can. It's really been masterful. And whether it's technology, they've always had a history of being late, all that kind of stuff. I can't argue with anything they've done from a structural standpoint to get the markets back to feeling like they were. They did an amazing job during the pandemic, and they brought in a lot of opportunity for those of us hanging around the stock market, and it's just been phenomenal that they give that. They did actually probably expand the wealth gap more than any other time in history in the shortest period of time. But at least they talk about diversity and equity, even though they probably don't believe in it much. But certainly their actions have been the opposite, and we know this. And but anyway, so that's it for the interest rates. Let's go on, and we have to touch on the dollar. I don't know if I'll be successful or not, but I have reached out to Richard Werner, who wrote the book Princess of the Yen. I'm hoping that I can do a podcast with him. I've got some other things that I'm going to be working with as well, that I'm trying to do more of. I want to have some interaction because I really want to hear his views on what I'm about to present to you, and I want to actually debate where he thinks I'm wrong or right or agree with me. I would love to have this conversation, so I'm hoping that that happens. And so let's do this. We're looking at something really interesting. This is the monthly Dow. We've seen a lot of pressure this month on the Dow, and what we're about to get here right now, let me bring up the market grid because this is significant, is we've got a lot of downward pressure, and I talked about that when we did get above the 10-month moving average last month. And as we look at this month, we reversed off of that. We got PPM1 down at a 0.70, which tells you there's still a lot of downward pressure, but we're actually potentially going to get a STX buy signal on the Dow, which at least tells us stability for the next 2 months. So the downside is probably over here. It's very close, I think, to making a turn. And it's interesting because I'm going to go through gold next, and I still remain bullish on gold. Thank you, Super Donkey. That's awesome. Yeah, I'll cover Tesla here shortly. I need to finish where I'm at here. So death crosses, you can usually fade those, by the way. I'm going to actually put something together and show how inaccurate and what a waste of time that even saying those words are. But matter of fact, this is actually key as well. The 21-month moving average is about to cross the 40-month moving average. And when that happens, that's usually a low. That would be your death cross, right? And typically what will happen, it'll set up a low, and we'll see how these PPMs and everything react here shortly. And but this is potentially the right shoulder of this pattern that will ultimately set us up to moving back into these moving averages up here, which are 90, the 95 handle. And I've talked about this before. So let's go backwards just a little bit and we'll go top down. So you'll see here, this is exactly what I was talking about. If we look at the weekly charts, all the PPMs are turning up. So in spite of this last 4 weeks down, we're seeing this upward slope. We're starting to PPM1 is actually went positive. So we're very, very close to making a turn in the Dow and start to move back up toward at least the 91, 92 handle, we'll call it, just round it off. And once we get above that, then you're probably going to head up maybe toward the 200-week moving average, 94, 94, 9,500. I'm telling you that this thing is going to be a magnet to 9,500, and that's going to start over the next couple of months. And most likely will have something to do with the interest rate analysis that I just talked about as well. So that it's all tied together pretty tight as you look at it. So having mentioned it, let's go ahead and let's go over and talk about gold here for a few minutes. And gold is going to stay sandwiched right now. This is the weekly, the 10-week moving average, and we're going to see that continue to be the major support in this pattern. So yeah, so as you know, this support is at the 1744 level. I mentioned this number, I think last night, I'm pretty sure I did, is that's going to be your bottom end. If you saw anything like that, you'd want to jump on gold. A number of weeks ago, I told you anything in the 16 handle was a bargain. That was the case. We've traded up to 1800. My expectations are, and I need to update this pattern here. 1 second here. Let me change these Fibonacci numbers just for a second. And these are numbers we've actually traded up to the 0.23 level, and that was at 1769. That's going to be the key level. That's basically where we're back trading just around right now. The 21 period moving average is 1799. So that is where we've traded so far. We traded up to that, and we're seeing the PPM starting to turn. We're waiting for the final one at the bottom here for PPM 3 to turn up. Once that happens, then the game is on. When we see the PPM 1 at least get above its first derivative and turn up, then that means we're heading for that 1860 level that I've been talking about for a while. But this pattern that's setting up is, I guess I'll argue this until they prove me wrong, is that this is a major bottoming pattern that is setting up here right now. And it becomes more evident here, and this is when somebody was asking why it keeps doing what it's doing. This is why, okay? The monthly charts, the long-term, the secular trends still have a very mixed element. The 21-month moving average right now is, let me bring that on screen so you can see that, is 1749. It's rising at 0.72, so we should remain above that level now that we're back above it. And it's going to be a sandwich job between the upper end of the market grid as well as the 10 period moving average are right there. So our RXT for this month, 1851, the 10-month moving average 1855. So those are very similar numbers. My expectation is that we are likely to see, when this month is over, see the gold market grid turn up slightly. So we're going to start to have numbers come into that 1840, 1860 levels. So we will get into the 1800 handle probably in the month of May. And it will be because of this bottoming in the Dow, believe it or not. Typically, the Dow is going to go south, gold goes up. That's not how it's been working. There's some other elements that are going on here. And I think with the interest rate analysis coming into, you know, into the Dow and now looking at gold, these things are still very connected. I haven't bought into the scenario yet that Bitcoin has replaced gold. I don't think that's going to happen just yet. So at risk of sounding like Peter Schiff, I'm still bullish on gold here. But this is a very long-term bottom setting up, and it's going to take quite a few months to set this thing up here. Yeah, Frank, I've been screaming for 100 hours on gold that you want to set this up. I just brought up the GDX, so we can look at the miners a little bit here. We'll tie this together. It seems appropriate, but we're sandwiched, just like I said. We're 21. 21 period moving average on GDX is 3280. The low's been 3284, high 3684, 3663 is that 10-month moving average. So we're going to remain sandwiched here. Just like I was showing you in the gold chart, we still have these mixed trends here. If you're a longer term player, you definitely can position here. That's what I was setting everybody up for, as far as getting in around anything under 1600 or any under 1700. Anything that had a 16 handle in front of it was a bargain, whether it was 90 or an 80. I think last month we got down, what was the number? Last month we hit 1676. So that was probably the lowest price you're going to see in gold for a while, I would suspect. We got a decent move off the lows last month, and then we got this month we're trading back above the 21, and we're really close to turning this thing. I'm going to tell you there's probably another 2, maybe as many as 3 months before we'll see this thing start to get above anything over 1840, 1860. It's going to spend a fair amount of time in here for sure. So if you're looking for instant gratification, not going to be the place to find it right here. Okay, let's go. I usually go down the same trail every time. I'm going to I need a neutral screen here. All right, hang on. I'm going to stay with you. I'm just putting some stuff on my screen that I want to show. Yeah, Peter Schill is correct. Just 1 second here. Let me get some things up here. I want to. Okay, so I just want to set this up. I'm telling you, TradingView is my new favorite platform here. This is a quarterly graph of gold, and I think this tells that longer term story even better than I imagined. But what you can see here, this is a chart back to 1971. And so what we'll see here is this is the big move up to the highs in 2011. This consolidation, we're right in a sweet spot. When we look at this is awesome, folks. I got to tell you, I'm like a kid with a brand new toy. I can't. I think this is just a game changer for me, being able to see these long-term charts because my long-term analysis has always been spot on. I've been wanting this chart for years, and I find out I could have had it for years, so that's somewhat depressing. But as we look at this chart, this is a 3-month chart or a quarterly graph of gold, and you can see where the PPMs are all very positive here, and the underlying support right now is let me get to the last number. It's at 1631 is the 10-month, or in this case, a 10 period moving average, which is a 10 quarter. This is phenomenal. PPMs are up at 3.16, and this even makes me even more bullish. So this pattern should start to unfold. I can't wait to get in here, do some serious Elliott analysis, and I could end up this could just suck me into stuff, and I'll just start doing videos beyond my beyond the daily. I just want to make videos and document all this stuff because there's some crazy stuff going on here. And yeah, it's interesting. These folks have gold back to 1834, and each fixed price there was each time. This is pretty amazing. Wow. Okay. Yeah, this is going to be fun, folks. That's all I can tell you. I'm super excited. But yeah, so gold, I I guess, gosh, I guess we could this could validate even Peter Schiff. But but this long-term trend, this is very real, and this is what I'm seeing set up on the monthly and then the weekly and all this stuff. So pay attention. If you're a WaveTech user, then you can put on the actually if you're a PX user, you can do a monthly secular trend. You can actually get triggers and trades off of the monthlies if you're a PX user. Yeah, I seriously, Red Rocker, this is like amazing for me. I'm like, literally, this is my second day, and if this is not a positive review for TradeStation, but I'm like, I get all my stuff into this platform. I'm probably done. I'll probably have a trading account with TradeStation because this thing will sync up with them. But as far as using TradeStation, there's no point after seeing all this stuff. Anyway, all right. So let's flash back over. Let's take a look and see. I haven't. I know Paul has been talking for a while, and look at that, up 1350. This is probably going to be a new high. Yeah, look at that. There's 4,200. Where's those trolls at that told me that the market was never going to 4,200? I can't find them anymore. They haven't been showing up on the channel. But here we are, 4,203. Let's take a look at the daily SPX numbers real quick here. There's some numbers right here. 4278 is R2 on SPX today. 4201.53. So we've taken R3 out. Next number 4214 is the next level. So, you know, these guys can't let it go. They're going to keep bumping this market. And, you know, I didn't go through some crazy analysis that I usually go through, but I will, like I said, I'm hoping that over the next several weeks, we're going to get all of the indicators into TradingView. At least you'll be able to see them. Some of them you will have access to. We got a lot to figure out here. Okay, so I know once I open the Pandora's box, so to speak, that they'll be public domain, and so that's okay on some of these. I want them to be. So let's. All right, I don't. Yeah, so we basically printed almost exactly. We went a buck over. We go back here. We're pulling back to 96 now after a little blip, but with 4200.78, so we did 4201.53, so about 70 cents over R3. I don't know if there obviously would have been a decent scalp already if you were selling against that number. Let's take a look at the futures real quick just for a second here. And yeah, high 93, so we didn't quite make R2 on the futures, and then we're backing off here. So, but I just want you to look, and this is what I was talking about last night on the video, is we're starting to see the PPMs start to move up again on the daily. There's something I didn't cover. I'm going to go back and cover it right this second here, and all right, bear with me. I'll bring it in from another screen. Wait, I do have it here. So let me go and let's bring up Portfolio Expert, and let's do let's take a look at this scenario. And I wanted to show you the database real quick here. Let me get off screen so I'm not in the way. But what I want to show you here is just the daily configuration here. We're seeing this thing start to move up 59%. We did see quite a few sell signals over the last couple days. In fact, I'll show you something that's interesting. We can look at the models. We've had over 8,000 new buys versus only 3,000 sells. So we've got a 5-to-1 buy ratio on the database over the last, going back to the 16th, so the last couple of weeks. And on the intermediate models, they've been flat, and that is pretty typical. One of the things that I think I can bring up, we'll see if this works. It's not going to work in this platform, but one of the things that I talk a lot about, we're looking at the current average profit is profit fulfilled is 84.7, and I've talked a lot about this on the intermediate models. I still think these things are going to exceed most of their expectations. We're going to see this thing continue on. The current average duration, we're only about 50% fulfilled. So there is about, I'm going to call it at least 1 quarter, maybe as much as 2 quarters in 2 quarters as far as the market goes. Let me move something around here, see if I can. This other configuration might be a little better here. Yeah, so but this is actually what I suspect is going to be the driver of going forward, is that we're just now, if we look at the current duration of trades that are coming into our system. Now we monitor 16,406 symbols. There's 9,778 symbols long right now, but the average days right now of the current is only 8.9 of 40. So we have at least another, this is something I talked about in a few videos ago, we have at least another 25, maybe 30 days of this cycle to go. And sometimes what will happen in the next couple of weeks, we'll get a recycle and we'll see the symbols recycle, and we'll see some slight selling and then some rebuying of new symbols rotating in. So there's symbols that are in our database that have been on for a while that will rotate out, and then you'll see a rotation back in. And when that happens, that's just super bullish. And we're looking at, you know, the sell in May and go away thing is not going to work this year, is what I would tell you. So let's take a snapshot back. Yeah, so it looks like we stabilized around 41.96, 97 on the S&P for the moment. So let's see what time we get to go. We'll get about an hour to go. See if there's anything. Yeah, let's do a couple things that we haven't talked about for a while. Let's come up here and let's bring up crude oil. We haven't talked about oil. It's interesting because you know, everybody's focused on electric vehicles, but it's funny, there's a lot of new gas stations going in around. If you look, you'll see. And I saw a story that was interesting that people are talking about. So many people are going to drive on vacation this year that there's going to be a shortage of fuel. So there probably won't be a shortage of fuel. So I'll have some fuel, some Runa. So anyway, let's take a look at crude, because I haven't talked about this for a couple of weeks, and crude oil I think is going to be interesting. I'm going to go to TradingView. We'll just call it TV. I'll go over from TS to TV, and I want to look at some of the longer term charts here, but the weekly charts are starting to see some pretty serious acceleration, and we're above the 200-week moving average. I remember talking about that some back in January, that we should get to this. Now we have to go to the monthly chart to see this further. Now we're over the 40-month moving average, and the next target is up at the 200-month moving average, $109. So that's not a double, but that's a big move. And I'm trying to, yeah, let's see what we can find out. See if I can get. I just want to see what type of. See if I can get a good chart here. Now, this is not what I want. Now this is going to do a negative because of the backwardation. I'll find a good contract, sorry. So here we go. This is where we're looking at here. This is the ppms. Like I said, we're looking at ppms 0.67, 1.44. This trend is actually is trying to accelerate here, and we're going to see further acceleration of this trend and move up to the levels I was just talking about. This is going to be, I believe, a pretty substantial move from the standpoint of energy markets are going to continue to expand. We're going to see at least an 80 to 90 handle on this stuff. So as I mentioned in last week's stream, the energy market, there's still a major play coming. It's not over. And maybe we can get into some of that stuff. So I see somebody commenting on a driving trip. You should have stopped by when you were in Arizona. But so let's go back to TS and just take a look at this thing. But this is the monthly graph. We're in the middle of the range. Last month we had a reversal. We're coming back. I am expecting it, like I said, an 84, maybe a $90 plus print on this market. I'm kind of getting all over the board a little bit, but I'm going to go in. I usually don't cover silver. Let's talk about let's do silver for a minute. I know the big Wall Street bets squeeze job never happened, but as we look at the weekly chart here, this has just been this elongated sideways range with a slight bias to the upside. I've talked about this before. There was a time when silver was looking much stronger than gold. When we go out to the monthly graph, you see we're really just locked into a giant consolidation. This spike that we had back last August at $30. I remember pronouncing that. I guess we retested it back in February, but these levels are going to be major resistance, and I don't think we'll see much over $30 for a while. We're likely just to stay in this range as far as that goes. Yeah, poke Fox. I agree with you. That's exactly what they're doing. Yeah, I'm not even sure we've seen the beginnings of that as well. I'm trying to jump around. I wish I was better on this platform. I will be there very soon. But let's take a look at speaking of this at lumber. This is the monthly. See if they let me do. Yeah. So this shows you how ridiculous this spike is. This is lumber prices all the way back to 1993. In 1993, interest rates were probably 12, 13% on mortgages, by the way, and they were jacking up lumber pretty good back in those days. This little spike here was, I believe, when Mount St. Helens blew up, and then it came back in. But you can see this is a long-term chart, 1973 to current. We've never been at these levels, and this thing's parabolic. So at some stage, we set up some kind of consolidation up here. And if we do a swing trade objective, we're not there yet. We're printing 1403 last. That's, it seemed ridiculous when it was at let's see here, what was this price at 595? Now it's at 1400, and you look at the ppms here, they are just completely off the map. We're looking at 9.2. That's 13% per. What do I have here? This is 1 month. Yeah. So on a monthly gain, is this 1 month? Let me double check something, folks. Yeah. So this is actually the 3 month, but yeah, this thing is just completely crazy as far as momentum goes. So we could see a spike when you get into these kind of configurations, or I don't even know if you can call them that. When you get into parabolic curve, it's very difficult to figure out where it's going to end. And even I just put up a bar chart here, and there's just nothing there. What you're going to have to watch for is a new high, a reversal, closing lower, and that might be the sign. I'll be watching for that as well from that standpoint. Yeah, it's kind of crazy what's going on with homes right now, for sure. Yeah. So okay. So we're going to keep going back between TV, TradingView, and TradeStation. I just want to go back and let's just see how they're doing. We're still up 825, 87 handle on the futures. We look at the cash right now, SPX 95. So we're at least stabilizing up there. And we printed, like I pointed out a few minutes ago, we printed right at the, we printed, let me get to cash, SPX, we printed right to the R2 number. And I mentioned last night, I thought we would get S1, R2. S1 was 4180. The low was 4181.78. R2 4200.78. The high 4201.53. Not a bad call, I think. So, but that's typically how these things should run, especially when you have, as I mentioned in last night's video, you have expanding PPMs. You've got that bias going for you, so you can expect those ranges. Typically, you get an S1, R2, an R1, S2, those increments, and you'll get 3 of these numbers, and you should hit an S number and an R number. Sometimes in low volatility, you get an R1, S1. That was yesterday, actually. We saw R1, S1, very quiet range. But I expected that ahead of the Fed. So now that we have this stuff going, we're looking pretty interesting here. And we can see that we're up 650 now on the S&P. We'll see how this thing finishes up at the end of the day. We've got some big numbers coming out tomorrow. The claims numbers. See, I've got the 3x5 cards again. Let's take a look and just. I've got a lot of this stuff already down. Yeah, so we have claims numbers looking at, I think it's around 540,000 new claims, and existings at 3.6. I've been talking about this number for a while. If we get under 3.2, that's definitely going to be a bullish number. So don't be surprised if we get that kind of number. And when you see the Fed already knows all the numbers coming out. Most of these numbers are already been compiled. So when they do their FOMC meeting, they see everything that's coming out. So we're that's going to be it. So what time we got? 12:07. And I'm just looking at some of your comments here real quick. Yeah, I think probably um, I'm not sure if there's any ETFs. I'm not a big ETF fan, and the inverses are very nasty. Internal fees, cost rebalancing. There's a lot of stuff. Um, yeah, that's what I would. I agree with Deloitte. I would just play some puts, but I don't think it's playable though. So it might be that it spikes out and just gets overdone. But the problem is there's a true shortage going on. So I've seen these things in commodities run before. We're talking about lumber right now, and but I've seen coffee runs, sugar runs over the years, going back in the early 80s. Sugar did an insane run from like 3 cents to 60 cents. It was absolutely incredible. And they do come to an end. But this is sugar and lumber and housing, there's a huge thing going on. Maybe we have to start shifting from building all houses with lumber. There already is a shift going on, but using uh, certain types of metal. There's metal studs and things they use typically in commercial, but there are some alternative building elements that are likely to come in play as well. But as long as people are changing their location where they are, which I think is the beginning of this cycle, we're going to see this thing stay very solid. So I'm not sure that there's always a play there. It's not like it's GME at 425. There's actually real economics behind this, what's going on, and the shortage of what's going on. So yeah, boy, Red Rocker, you're very old. You remember the tulip run. Um, yeah, maybe 3D printing. Sure, why not? But yeah, there's going to be a lot of things. So the housing part of things are is going to continue. I talked about this going back last year when we started seeing a big migration. Uh, folks coming out of California going to different places. That's it. All right, I'm just looking and seeing that. Yeah, Steve Weiser, I agree with that. That is probably a game changer. I've seen some of those 3D printing on houses. This is the interesting thing. Um, there's other components. I talked to somebody the other day, and the cost of windows are up over 300% right now. All types of components are existing. We just don't have a market that we can see these things on. And chances are, if there was a public company that maybe you could look at Windows, then that would be, you know, maybe maybe there's a short somewhere in there, but I don't think so, because even if you print the houses in concrete and you go to at, even if you print them in concrete and you go to the you still got to buy windows. You still got to buy the fixtures. You still got to buy all the other stuff that makes a house. So while there might be some stuff going on there, it's really not going to be very good. Now we're selling off the futures. We're down 375. Let me go back to the live screen here. So we're getting some selling coming in right now. All of a sudden we got a nice little blip here. We're very close to the low of the day. So we're getting a reversal off of that 93 level. So we're almost 20 handles off the highs all of a sudden. But definitely a little selling coming in. Yeah, let's go back over. Yeah, I hadn't looked at coffee for a while, and somebody mentioned $6 coffee. This is, let me go back to 1 month. Coffee was actually more expensive. Let me do it. There we go. This is monthly. So coffee is starting to move up a little bit. We're above it, 200 month moving average. But we're looking at the PPMs here. They're just super accelerating. 3.80, 1.97, 0.96. So this is nice. Yeah, I'm still enjoying my new toy, being able to bring up all these markets very easily. So yeah, so there's a long ways to go. You can go back to 14. We had that squeeze on coffee, but let me go back here for a while. These are, man, I forgot I could actually show you this, but this was one of the squeezes in coffee. But let's do, so this will show you this. Let's talk about parabolic curves for a minute. Maybe that'll. I may not have access to this real time. We'll see. Yeah, so this is what I was talking about. This run right here in sugar, 1985. We went from $3.12 and all the way to 14. That was a pretty big run. But you can see even over here in 72 there was a big run as well. So, but these kind of rallies, what you get, and this is what you look for. I'm going to go to a bar graph here real quick. I wish I'm not. Yeah, I'm not sure. I know there's a way to zoom in. I'll get this all figured out by the time we're live here. But this range here, what we're looking at is these type of rallies. Usually, what you'll get is some kind of reversal pattern. This one was good, where you get an outside reversal. So what I would look for, going back to lumber, right? Let's go back to lumber. Always put lumber. I want random. Yeah, if we go back to lumber, what you want to look for here, and this is a monthly graph, but let's go to a weekly. Let's just go to weekly here. What you want to see is a big reversal. We actually had one here. This is exactly what you want to watch for. Is we had a reversal, it closed lower, it went down into the moving averages. With these moving averages at the levels they're at here, this trajectory is way too strong to actually be a good short yet. So you're looking at, this is weekly. I would say 4-6 weeks, you could look at this market fairly close. Maybe at that time, Christoph, you might want to actually look into maybe finding, find some correlation with maybe the lumber futures with some company that, one of the lumber companies out there might be a way to go. Okay, so let's see what's going on in the world. We're trying to stabilize down here back at 81, up 325 on the day. It'll be interesting to see how this thing finishes out. Yeah, so let's, I see somebody asking for something here. I can't seem to get Jeffrey Harden. I can't seem to find that symbol. Is that the right symbol, NOIZ, or is that NOLZ? I can't seem to find that. Yeah, let's take a look at a couple stocks here. Let's go to Apple as we come in to close. Apple's flat. Earnings coming out after the close, so the expectation there. I would suspect, let me go to weekly Apple here. Yeah, there's a nice bias to the upside. We get sort of a mix here on the PPMs, but they're turning up, which is somewhat positive. Market grid for the week suggest it's already printed an R1. Maybe we could see an R2. This thing looks like it's just going to continue to consolidate here. Yeah, the semiconductors flat as well. Remember, the White House is going to save the semiconductors, the shortage. They're going to fix everything. Facebook is up 1.8%, up $5. We're trading at near the weekly highs. We're high 310.92, R3 311. So 311, 314 is about it for this week. But we do have very positive trends. It looks like this thing is possibly going to turn up even higher. And the key numbers will be the old highs up there at that 315 level. Once we get above that level, then you're probably going to get a swing objective. PPMs are all in really strong shape on a weekly basis. Yeah, exactly, K. Burgess. That uh, that is what was advertised, was that there is a huge shortage of semiconductors, and that has not happened. We'll put up coin. I think coin is going to 230, just off. We're finally getting enough numbers where we're seeing this thing. We don't. Let me just see if I can bring up something here. I know that we put it into our platform. I'll be able to get potentially a better reading on coin over here. There's just not much there. At least I can get a PPM reading here. PPMs are all negative, so that this is a tough one to read. There's just no data. This was probably one of the biggest sucker plays since Snap came out originally. Yeah, there's not really a coin is just a guesstimate, but I do think it's going to go down for a while. You know, it was a direct offering. There's a lot of folks that were insiders that I think are continuing to sell this stock now. Yeah, so market stabilizing here. We still have a little bit over a half hour to go. Yeah, there we go. Louisiana Pacific. Somebody, good lumber stock. Interesting enough, with the lumber going up, we got 2.3 down, and so maybe we still, this is a daily chart. We got PPM1 up at a 0.71. That's 66.75 is going to be major support here. Let's go to weekly. Let's see if there's anything there. Yeah, weekly we traded 70.90, R2 70.55. So we hit an R2. The low so far this week, 67. So we've had an S1 R2 for this week. PPMs are 3.92, so it's pretty positive. Major support will be on the 10, which will be $61. So there's not a lot of downside here, I wouldn't think. We'll probably stay within the grid for the next couple of weeks, and the grid should stay very similar to where it's at right now. with the extreme 61, which would be a move down to that 10-period moving average as we come into next week. And this would be, I guess, the range that would be expected for this stock. You know, we saw last week a range of 62 to 69, and STX was 62, 69 was R2. So my expectation on a weekly basis would be we remain in this choppy zone. When the 10-period moving average moves up underneath there, you'll probably see an extension and at least trying to retest the highs, possibly making a new high. So I'm trying to so here's Norwegian Cruises. Somebody mentioned there was a wave tech buy on this. Let's bring this up in, was that a, let's see here. At 427, there was the buy. We'll bring up this symbol graph here. Let's just do a 1 year. Yeah, it's been kind of choppy up here. Been kind of whipping around. This is on a daily basis. Let me put this up on a weekly. On a weekly chart, this thing's been long for a while here, around $16. Let me go a little further out. Yeah, so it bought back in September actually, so it's been playing this trend for a while. It sold out right before the collapse. See if I can get a trade log on this thing. Yeah, so you can see it bought in on 620. Hang on 9/8 of 20 at $18.02. It actually sold on February 10th, 2020. It exited the position. So we'll go back to the chart here. You'll see that exit right here, this red button. So it bought, and right before it rolled over, it sold out. And now we're back in and holding on an intermediate level on it. If we put this into optimized daily, you'll see a little bit of noise in this consolidation here, where it bought, did a pretty good job, sold it out, bought it, sold it, bought it back in. So this is a bit noisy from this standpoint. It also had a sell before the big decline, and it's not really made a lot of money trying to trade this thing. There's a couple decent trades here. We can go to the trade log here, and you can see the most recent trades. The last one got whacked for 10%, made 17, made 11, lost 6, made 37 in the last 4 trades. So it's been kind of choppy on a short-term basis. If you're a WaveTech user, that is something that we definitely want. The intermediate has been long, like I said, since last September, and the short term is getting chopped around. This next trade maybe will be a good one. I don't know that the CDC has released anything on anything as far as these folks go. Now we'll bring up on WaveTech has been long PayPal. for a little while here. We'll take a look and see what the it bought on the 5th at 250.51 is the last purchase here. If we do maybe a 2-year look back, that is a 2-year, 1-year look back. You see it's been out, so it's gotten back in. Looks like it's trying to fade here, so it's going to have support at around 260 right now. Let me just bring that up over here so we can get this. Let me just move this over to daily so we can see that daily trade. Yeah, that number is 262 is support on PayPal. And like I said, it's been long since coming out of this base over here and early at 250. So it's still holding that trade, trading 270 right now, but support is going, major support 262 on this one. Yeah, one of my favorites, PLTR 2386, just trading in this flat line here. Let's go to a weekly. I still think I'll have to go over to our platform. I think there's still not enough data on this one, but we're trying to stabilize down here. The lows at 21. I advertised if we did close under 20 that we would probably head down to 18, maybe as low as 14 in this one. There's just not a lot there. Let's see if we can bring it up in Portfolio Expert, see if we can get anything here. The good news, these are the returns. Let's see here. Yeah, it didn't start trading till October, but it's done a pretty good job versus the S&P actually. So we're just looking at it's made 150% trading PLTR. Let's take a look and see what it's doing right now. It actually just recently got a buy like yesterday. Let's take a look at that just a little bit more. So got a buy on PLTR on 427 yesterday at 24.17. So we have an open buy on the short term. If we go and optimize for weekly, I don't think that, yeah. It's interesting because weekly is still holding its original position basically a week after the IPO. It bought at $10.40. So it's still holding that trade. As we just look at it, going to TradeStation, looking at short-term analysis, there's really, it's trying to set up a bottom here. And like I said, our model's got a buy. We got PPM1 starting to tick up, PPM2 and 3. So we'll see what the expectations. I don't think, I know I'm flopping you back and forth on this stuff. I don't know what the trade profile is on this. Here we go. Yeah, there isn't one yet because we don't have enough. Hang on, bear with me. Let me get to daily. Yeah, so we don't really have an. Do we? Hang on. Yeah, it's looking to hold this thing out to June 25th right now. So we'll see. There's really there's not enough data there to really do much with this stock yet. It takes a little while to populate a stock like this trading, but it does have an excellent rating. It's got a what we call an effectiveness ratio of 338. So it's done a fairly good job. The last trade was a loser, had two true loser trades, had a nice winner off the lows, and that's really been it. So we'll see if this next one can play out. So maybe ask that question next week when we come in. Okay, let's go back and just see markets trying to come back in. We're up 625, so there's still an underlying bid in the market, so no one really wants to sell it here. Uh, I'm not sure if the earnings coming out today will be impactful or not. There's quite a bit of stuff coming out. I really had a higher expectation for this stuff, but I think now that the Fed's out of the way, a lot of the news we've already seen this week will start to be digested here. Bear with me 1 second, folks. Okay, folks, sorry about that. Yeah, we've really just stabilized in the markets, not a lot going. So we'll keep going through some individual stocks here for a few minutes. So let's see here. Somebody was talking about this MVIS. We got an RTX sell. This is 2 days ago. So then we got an STX buy. So we're up a little bit from that level, but we're really looking at this thing just consolidating here. This is crazy volatility here in this particular stock. I'm not sure what they do. But this thing's not going anywhere for a while. Chances are this spike here was a high 2780. You'll be waiting for a while to get back above that level. It's very similar to when we got up here over here on 216. We got an RTXL. We kind of drifted. I suspect this is actually a larger pattern, so there's probably more risk in staying sideways for a longer period this time. PPMs are up big numbers, but the way this thing broke out is just suggests there's a lot of work to do on this thing. Yeah, so this is I guess North Shore Global Uranium getting a breakout here. PPMs are turning up, everything's turning up. Let me put a model on this real quick. I just want to see something. Yeah, no buy on this one yet. I was just curious if there was anything. It's actually been short for a couple weeks, so it looks like it's trying to bottom here though. Let's go over here to the weekly. And I don't know if we have this in our system or not. Let's go over to Portfolio Expert and just see if we have this one in here. We do not have it in our system. Let's go over to yeah, so here's the weekly graph. Not a lot there. They do pay a dividend, so that's handy. But yeah, so my expectation would be that the worst case that we'd see a range. We're printing above it right now, but the downside range is probably about 51, 52 on the downside. If this low here was, what was the low here? Was 53.36. That should hold. If that doesn't hold, then we'll see around 51.50. So there could be some more downside. There's definitely PPMs have all rolled over. This suggests we're probably heading toward the 21, which would be that 50, 51 level, something like that. Go back and see where we are as we're getting closer to the close here, up 375. So another nothing day. Got a little blip up to 93, so we're 10 handles off the highs on futures right now. All right. So I guess, Christoph, I can bring up the on the TSX now. That's handy. At least I can give you some readings here. This is the weekly. So similar, the 21 period moving average is up at 1.82, 0.20. We're right at trend level, so that support line is going to be pretty significant. 2102, 1923 is going to be major support on this. And it looks like we're probably setting up. I wish I had the market grid here so I could see the formation, but it does look like to me that we should set up probably a consolidation. There's probably a complex consolidation going on, and I would suspect it would be something something like here. I'll try to draw this in where we're going to get a some sort of pattern like this to set up, and from an Elliott viewpoint, and then once this is completed, this moving average over here should come up underneath, and that will be where the bottom of this pattern will be formed, and therefore you'll start to get something set up there. I'm just trying to see if I can. I can't wait till I know this tool well. Yeah, so we should set up a low where this moving average comes up in here, maybe right around this level, and then you would see this thing set up. So I guess my expectation would be for it to set up a low somewhere in this pattern. I'll be glad when I get to understand how to use all these drawing tools, but this is that's likely, I guess what I just talked about is probably another 8, 12 plus days in this configuration. Yeah, good call. Let's do Bitcoin. I usually hit that after the dollar, so apologize. Bitcoin's very interesting, I think, from the standpoint. I think the absolute worst case now would be a move down to maybe 44, which would match, be a little lower than what we went in last week. But if you get down 44, 42 would be the absolute bottom of this pattern here. So if you can get another $12,000, that's hard to believe. I remember when it wasn't even 12,000. But if you could drop down to there, that would be a key point. Let's take a look at the daily. Is that the daily configuration is still got a fair amount of downside pressure. The resistance is going to be right here at the 57, 50, 56,900, 57. That's going to be your major resistance. And right now we're coming back towards the 10, 53,709. If we get back below that, you could see this thing turn south and start to print back under 50,000 again. But I think when we go back over to this chart here on a weekly, they're likely to just stay in this sideways range. We really, in spite of this little spike that we've seen, since we got this spike above the market grid way back on February, we've managed to go higher a couple of times, but we're just basically in this broadening, rounding formation, and we're looking at the PPM1 is very negative, so that's going to tell us that the 10-period moving average is going to be 55,270. We're going to hang right around this level, a little bit above, a little bit below. R1 is 54. Let's see here. Let me get this right. R2 56,935, S1 50,304. I'm going to put that as probably one of the likely places to be. We're going to step back, look at the how the market's doing. We've actually turned back south a little bit, a little selling come in and close. The low in the futures today have been 72, so we're trading at 78. It's going to be interesting to see how this thing comes in. We'll do a couple more stocks and then yeah, let's do a couple more stocks here. All right, folks, you got any market stuff? I see a lot of stuff going on that is non-related. So maybe we should end the stream and go back on doing something else. Yeah, so here's ETH, Ethan Allen. So everybody's buying furniture for their house. Remember when these guys were, if we go back, let me go over to, let's go over here so we can do some long term. Yeah, here's Ethan Allen International. I'm not sure if this is what you were talking about, but yeah, this was when these guys were going to go out of business in 2008. Now they're, it looked like they were going out of business a year ago. Now they're in business again. So let's go back to TradeStation, take a look at this. We've got about 5 minutes to go. So we are about to get a weekly RTX sell signal. So that suggests that we will come back in. We did bounce nicely off the 10-week moving average here on Ethan Allen. And we're, the PPMs are all very robust trends. So that bounce off of the 10, if we look at where the if I bring up the market grid for a second and look at the 10, 28.12 was the fast average, 28.43 was the low, and now we've penetrated through RTX 30.95. So if we close on a weekly basis above 30.95, then expect to see it pull back in. Probably it'll probably be around maybe 29.30, worst case 28.30, around that range. So let's see here. And what else we got? Here is Stillwater. It's some decent support right here at the 1891 level, ppm1 plus 0.52, ppm2 1.40, 1.41 on the ppm3. So decent trend here weekly. As far as any objectives go, let's see if there's any Fibonacci objectives out. There's actually some new Fibonacci projections out right now. This is one of the tools I want to get into TradingView. 23.25, 25.60, 27.04 are the upward targets right now for this one. So this is at a pretty strong formation. PPMs are below their average, but they're in the what I call the trend mode. So everything's good here from that standpoint. We're just going to continue to go up this trajectory in this trend. Yeah, I just brought up Ether. Somebody was mentioning that. What time we got? We got 2 minutes. I'll do a quick one. We're trading up at the high end of the Ether expectations for the week. RTX 2747, high 2745. So we're trading right at RTX high for the week. But Ether is much stronger looking. Bitcoin's definitely got a lot of work to do before it goes on. So let's take a look real quick. Let's go to let's take a look at markets and just see how they are. Down 325 on the futures. We've got under 2 minutes, so we're going to hang out here for a minute. So we traded up to 93. We're trading 20 handles off the lows. In fact, they're trying to push it into new lows on the close, which is never a good sign. So no one's super impressed by anything, and maybe this is a little protection. In just a couple of minutes, we're going to get the Apple earnings and some of that stuff to come out as well. It looks like to me they're going to try to print a new low on the session. Here we are 200 points off the lows. See if they'll stabilize right here. Okay, there's the bell. Yeah, I'm watching for the Apple report to come out, so I'll hang on around for a few minutes. All right, we did not make a new low. We're seeing a little short covering as we come into the close. After the close, that critical 2 minutes after the close where we see the settling of trades coming in. So we're seeing a little bit of bid, but we did finish at the low of the day. Let's take a look at the cash real quick here. SPX down 327 on the day. We did print to R2. I mentioned 4201. There's the 42 handle finally got reached, which I thought it would. The big issue that we're seeing here is just that narrowing of the volatility that I talked about, the volatility squeeze. That suggests we still have some vulnerability down to 4170, 4160. So there is a little bit of downside that's going on. Yeah, just a really, this week had a lot of promise, I think, from the standpoint of what was going on here. I thought that the earnings would be able to get some excitement in the markets, but nothing seems to be very exciting. So anyway, folks, thanks for hanging out today. It's been, just nothing going on here. These are very, very boring market. Up 3, up 6, nothing really going on. Here's the QCOMs coming out with earnings right now. They're up 4%, up 5% right now. So that's the first one to come out. I'm just watching some of these earnings coming out. So let's go over there and take a look real quick. Yeah, 554 right now, 145 on Qualcomm. There is a new objective here, looking for 148.70 to 158. So so far we're not seeing any of the. We haven't got Apple out yet. I know it's coming out here in a minute, so I'll hang on. Yeah, let's take a look at NEO. On a short-term basis, NEO we got a buy at 38.99. It's trading 41.20. The PPMs have turned up pretty nicely, so we're seeing a move up to PPM1 at 1.08.7 on PPM2. So this has got some decent possibilities here on a short-term basis. On a weekly, we do have some high-end, still got some crazy numbers hanging out there at 96.79 minimum objective. I'm sure whoever's asking that question would like to see it go there. Yeah, so they're still talking Qualcomm here. It's now up 6.39%. Okay. All right, folks. Yeah, we'll do it. We'll do one last one. Favorite ag tomato stock here. App Harvest, trading up at the higher end of the range. Yeah, this is a weekly. Let me go to a daily here. Daily just got a buy, it looks like, on 1.2 daily, 1730 buy. So it's trying to look higher. PPMs are flat, but PPM2 is actually up 0.25, which is a bullish number. We're just going to have to get above this 1858 level to get this thing moving about another $1. So that's about it for this session, folks. Thanks for hanging out. Kind of we're all over the place. I'm going to be working on getting my TradingView chops together so that I can really use that platform. I think it's going to enhance a lot of work, especially when I get a bunch of my proprietary stuff over in that level. And we'll see what gets published public and what happens there with that platform. But at least we'll have the ability to use it at a high level. So thanks again. Thanks for everybody showing up. And yeah, it was fun. So as always. So we'll see you tonight in the video. We'll see if anything comes out. I'll probably talk a little bit about what Paul had to say, whatever that was. I'll watch the replays on that, and we'll see if there's anything significant. Obviously, the markets don't think so. But a lot of times after the Fed's out, we're going to have GDP. We've got the continuing claims and the claims numbers tomorrow. And there's actually another big batch of earnings to come out. So we'll see after the Fed, see if all the digestion of what's going on with the earnings and everything actually gets to be significant. So Facebook, as I mentioned earlier, I thought it would go up. It's up 6.62%. Looks like Ford is out. It's actually down, even though it beat on revenues. And see what else is coming out here. Yeah, there's Facebook. Go back to Facebook real quick here. Let me bring that up. Yeah, Facebook up 6.2. I thought that was looking like a breakout. I talked about that earlier when I covered Facebook. So that's pretty exciting. We still haven't got Apple out yet. Anyway, folks, I think we'll just call it quits. Thanks again. Appreciate it. Don't forget to subscribe and like and do all that stuff so the YouTube guys like us, and keep following me on TradingView. It's just Kendall Report if you want to find me there. There's no content yet. There will be some very soon, guaranteed. All right. Probably around the weekend or early next week is when I'll have everything ready. I'm working on a couple of big projects. We're still getting some of the code together and some things like that. So anyway, thanks again for watching.